CES delivered a boost for technology, earnings season kicks off next week, and Louis' prediction of 5% GDP growth on Maria Bartiromo's show on Fox Business has come to fruition after the Atlanta Fed raised its fourth quarter GDP estimate to a 5.4 annual rate. Let's dive in. Welcome back to Navalier Market Buzz.
And way before the Atlanta Federal Reserve reported 5.3% growth,
right.
It was that man right there in the middle of your screen, Louis Navalier, who told us on this program to expect 5% economic growth. And Louis, thanks for that, because when you said that to me, I thought, wow, that is a big number. I can't believe he's modeling his investing around this expectation of 5%, but you were right, spot on.
Dad, congratulations. How were you able to see the surge in GDP growth before it showed up in the data?
Well, to be honest with you, it was just largely due to the booming exports. This is the second month in a row that our pharmaceutical exports are causing the trade deficit to collapse. It's the lowest now in 16 years. And, I saw that onshoring, obviously. And if we ever get oil prices higher, the deficit will disappear because the U.S. is a huge exporter of not only crude oil, liquefied natural gas, and all kinds of refined products. So this onshoring is really what's doing it. Now, there was one other thing. Productivity surged to the highest level in 5 years. And now whether that's AI making all the workers more efficient or the fact that hiring's kind of weak right now. So, as you have more senior workers, they tend to be more productive. But the productivity gains also boosted the GDP report. So what's amazing is we're having this incredible GDP growth with the manufacturing side of our economy down for the last 10 months. And we not only have to fix manufacturing, we have to fix the housing market. And President Trump has made some proposals to try to fix the housing market. He's intervening in the mortgage market, buying a bunch of mortgage bonds. So if we can fix housing, we will almost approach 7% GDP growth. So there's a lot of exciting things. Now, I should add one thing on manufacturing. Only 2 of the 17 industries that ISM surveyed were up in the past month, but they were electrical equipment and computers, which means data centers. So the economy is still overly dependent upon data centers, but I've just got a tax cut in the new year that's going to put more money in people's pockets. And what we call the velocity of money, how fast money changes hands, should go up. So there's a lot of hope as the new year arrives.
Now, CES often acts as a catalyst for technology stocks. Did we see that effect in the market this past week?
Yes. Our friends at Bespoke did a report that showed how the technology sector was boosted by CES. So there's no doubt that CES kind of lights a fuse under a lot of our great tech stocks. Of course, NVIDIA was dominating the CES news with its new Vera Rubin chip that will be 5 times more powerful and 10 times more energy efficient. And of course, they announced it's underway. In fact, TSM, the manufacturer of those Vera Rubin chips, just announced their sales in the latest month are up 20.4%. So that's just great news. So CES was very, very upbeat. And in addition to all the AI and robotics and self-driving news, the other news was the TVs keep getting bigger and bigger and bigger. And last year, there was a lot of manufacturers had a 115-inch TV. Now Samsung has a 130-inch TV that everybody's going to copy. And when you go watch the football playoffs, and the college playoffs as well, try to have a friend with a big TV.
You were on the Fox Business panel this past Friday as the December payroll report was released. What's your assessment on the job market and its implications for Fed policy?
Well, the big news is not so much that jobs came in less than expected. There were 50,000. The Wall Street Journal survey was 73,000. And the unemployment rate did drop to 4.4, down from a revised 4.5% in November. But the big news were the downward revisions to November and October. Specifically, in October, they reported that 173,000 payroll jobs were lost. Now, that was during the government shutdown, but that's a big downward revision. There's one other thing. The Labor Department, not that long ago, said the payroll numbers for April 2024, March of 2025 are going to be revised down in the upcoming months. So what happens at the Labor Department is sometimes people have two jobs, so they count one person twice. And so there's going to be some massive downward revisions. And that's going to allow the Fed to keep cutting rates because their job is to promote employment as long as there's no inflation. And we don't have inflation right now. We're going to get that in the numbers here. So this is very exciting news. And Steve Moran called for 150 basis points of rate cuts on Bloomberg. Scott Bessett's calling for more rate cuts. Obviously, President Trump will announce his pick for new Fed chairman, and he'll be pushing for more rate cuts. So the stock market's going to get a turbo boost from all this, and this is all great news.
You mentioned that Governor Stephen Moran was openly calling for an aggressive rate cut. How meaningful are these comments?
Well, he was Trump's pick, okay? One of the Federal Reserve the governors resigned, and Steve Moran was his pick. He came from the Council of Economic Advisors. He was working with Kevin Hassett. And, so he's pushing the Trump agenda on the Fed. But what I like about Stephen Moran is he has an economic model, as does Christopher Waller. And the flaw with the Fed has been they've been driving through the rearview mirror. They react instead of think, okay? And I think it's about time we get people on the Federal Reserve that have good economic models instead of driving through the rearview mirror. So Christopher Waller saw the decline in the labor market. Stephen Moran sees a decline in inflation. And hopefully we're going to have a Fed chairman with a great economic model. Then they have to convince the other Fed governors to follow that model. And so I, for one, will welcome Jerome Powell's retirement. He can technically stay on the Fed. I would hope he would resign and retire. If he doesn't, Stephen Moran might have to give up his seat for the new Fed chairman. So it would be good to have Stephen Moran and the new Fed chairman on the Fed with Jerome Powell retiring. But that's going to be up to Jerome Powell.
When do you expect Trump to announce his pick for the next Fed chairman?
Well, Trump controls the news wires, okay? And obviously, he's been very busy. As we record today, a fifth oil tanker has been boarded. He's been bragging about, he now controls the Venezuela oil. Marco Rubio and his team are in charge of Venezuela. Apparently, they released a bunch of prisoners in Venezuela today, so that was good news. But he's controlling the news wire. He's also taunting Iran because, Iran has all the protests. And we'll see if the mullahs fall. If there's a leadership change in Iran, that's going to be great because Iran's a sponsor of terrorism, with Hezbollah, Hamas, and all kinds of other proxies. And then hopefully we'll get a peace dividend in the Middle East, and then hopefully Ukraine and Russia will stop fighting as well. But the main thing is that he doesn't want to announce the Fed chairman until he has a good window to promote this, the new Fed chairman, because he's got to get congressional approval. And, our president loves to torment people, okay? And so after the decisive military action to get Maduro, he's now openly talking about buying Greenland. And our European allies are furious. And in fact, they just pulled out of 30 things with the UN that's got them mad. Most of them were green energy commissions and committees. And so he just has to have a window. So I'll give you an example. If next week Taylor Swift and Travis Kelce announce their wedding date, they're going to dominate the news media. And until that dies down, Trump will have to be quiet. So, but right now, Trump will pick his window, and he's a master of, again, dominating the news wires.
Let's turn to earnings season. Let's start out with JP Morgan. What do you expect for their report?
Well, first of all, there's a lot of banks coming out next week, and I don't want to talk about all of them because you're going to get bored hearing what I'm saying. But we are going to talk about two of the most important, which is JP Morgan and Morgan Stanley. But all the banks are being aided right now by a steeper yield curve. And we can thank Treasury Secretary Scott Bessent for that. The bank profitability should be very good across the board. Now, in JP Morgan's case, their revenues are forecast to grow 8.1%. Their earnings are forecast to grow 4.7%. This is the biggest bank in America. Jamie Dimon is, in my opinion, more powerful than the Federal Reserve Chairman. And so his comments are going to be very, very important. So I do expect JP Morgan to surprise. We want to look at their loan loss reserves to see if they're increasing them. But as interest rates come down, it should help with the loan loss reserves. And Jamie is kind of a notoriously grumpy, but hopefully he'll be more upbeat for a change.
And what about Morgan Stanley?
Well, Morgan Stanley is more of an investment banking firm. Their revenues forecast to go up 9.1%. Their earnings are forecasted to go up 8%. There's some positive analyst earnings revisions, so the company should post a good surprise. Their third quarter surprise was huge. So I think they're going to surprise due to underwriting and investment banking revenue. Morgan Stanley is a very interesting firm because McKinsey, the consulting firm, basically took it over years ago. And they hired this guy, Mike Baker, to be their strategist. And Mike Baker, for several years, told everybody to get out of stocks. And what happened is Morgan Stanley then led the charge into private credit, $3 trillion a year industry, and as well as alternative investments like private equity. So it's interesting that one of the biggest firms on Wall Street doesn't sell stocks like they used to, or sell managed portfolios and things like they used to. Instead, they're selling much more profitable things like private credit and private equity. So I'll be interested in to see how that business is doing as well. Private credit had a bit of a stutter step with the Blue Owl news that they might merge a fund. People could lose some money, but they call off that merger. But Morgan Stanley is obviously one of the biggest catalysts behind the private equity and private credit push. So I want to see how that affects their bottom line.
Turning to Delta Airlines, what's your outlook for airlines this earnings season?
Their sales are supposed to go up 0.8%. Their earnings are supposed to go down 15.2%. There's some analyst cuts, but Delta has a very good earnings surprise history. They have a hub they have multiple hubs, but their hubs tend not to get disrupted by weather as much as other airline hubs, even though they have Minneapolis and Salt Lake in snow areas. So I think they're going to surprise. Also, fuel costs are way down. Okay. So I'm expecting a good report from Delta Airlines. I'm not sure they'll post a positive earnings announcement, but they're going to beat analyst estimates.
And finally, Taiwan Semiconductor. Why is this one of the most important earnings report of the quarter?
Well, because they make the NVIDIA chips, the Blackwell chip, the Vera Rubin chip. They just announced a 20.4% increase in sales. Now, for the fourth quarter, the whole fourth quarter, the analysts are forecasting 17.7% forecast sales growth, 30.3% forecast earnings growth. There's positive analyst revisions. The company has a very strong earnings surprise history. So I'm expecting a nice surprise. I'm expecting guidance that's going to be great. And we would like to know if Taiwan Semi is building NVIDIA's new GPUs, the Vera Rubin, in Arizona, in addition to Taiwan. So, we are onshoring this and trying to move from Taiwan to Arizona. But right now, both plants have to operate at near full capacity.
Let's switch to some subscriber questions. What are your thoughts on SanDisk versus NVIDIA, and how do you think GPUs versus TPUs compare?
There's no comparison. SanDisk is solid state memory. And obviously, the best performing stock last year was Western Digital, and they make the memory that goes into the data centers, and we can buy Western Digital memory sticks and disk drives and things. My big bet in that area is Seagate Technology, STX. But SanDisk is obviously a very respected player, but it doesn't really compete with NVIDIA at all.
And lastly, another subscriber asks about PSIX. What kind of earnings report would it take for the stock to move meaningfully higher? And should investors expect continued choppiness in the meantime?
Yeah, there's two very small companies that have been benefiting from the data center boom. One is AGX and the other one is PSIX. And because these are small cap stocks, they are very bunny-like. They sit, they hop, they're very erratic. And PSIX also is very busy in the oil service sector. All the fracking and everything gets done out there. So they're helping the data centers, they're helping the oil industry with all their infrastructure. PSIX which is Power Solutions International, their earnings momentum has peaked. And I think that's why some investors are nervous, because if it only posts 30% sales growth instead of 36%, people seem to get upset. But when companies have very strong sales and earnings, and especially when they still have profit margin expansion, I tend to stick with them. And the data center business is getting bigger and bigger. It's a lot of this incredible GDP growth that was just announced.
Well, lots of exciting news this week. Thank you all so much for watching. Please give this video a like and subscribe if you haven't already. Drop any questions that you have in the comments below, but we will see you all next Wednesday for a midweek update. Thanks so much, everyone.